U.S. stocks ended little changed on Wednesday, with the Dow dropping 0.1%, the S&P 500 flat, and the Nasdaq edging up about 0.1%. The U.S. Federal Reserve left interest rates unchanged at the conclusion of its two-day policy meeting, as expected. The Fed's statement signaled borrowing costs were still likely to fall this year, but at a slower pace than previously expected. Stocks were solidly higher before the statement, but pared gains. Nancy Tengler, CEO of Laffer Tengler Investments, said equities should still thrive in a high-rate environment.
Let me start by saying that the Fed funds rate at 4.25% to 4.5% is a burden on consumers, and particularly low-end consumers. But it's not necessarily a burden on the economy. In the 90s, we had a Fed funds rate at 5%, and stocks barreled upward, melted up every year for 5 years in a row, from 95 to 2000. So I wouldn't be afraid to own equities if the Fed doesn't cut rates this year. And in fact, a slow rate cutting cycle actually is better for stocks. But I do think they're behind. And I think that it would be beneficial, not just for the American consumer, but for the federal deficit.
Stocks on the move Wednesday included Coinbase Global, which rose more than 16% after the U.S. Senate passed a bill to regulate stablecoins, a major step towards legitimizing a once niche but now fast-growing corner of the crypto market. Shares of Visa and MasterCard each fell about 5% on the news.